When you're investing in real estate, you can lose your shirt very easily. So in this video, I'm going to show you how you can mitigate and minimize the possibility of losing that shirt, the possibility of that risk, and make it so your investments are as risk-proof, as risk-free as possible. Stay tuned. I get asked this question all the time. When is the next real estate crash going to be, and what are you going to do when it comes? So with that in mind, I wanted to do a video that shows you what you can do when that crash comes, because nobody knows when it's coming or how big it's going to be. If you want my quick opinion, I don't think it's going to be catastrophic like '08, and I don't see it happening in the near future, but it will happen eventually. There will be a correction. So how can you set up your business now and set up your rehabs and set up your projects to minimize that risk so that you're not left out to dry and getting really hurt when the market does dip? We do this all the time. We shoot a bunch of videos every single week. We give as much as we can. So if you appreciate this video and you're not subscribed, make sure to subscribe. If you are, hit that notification bell so you get notified first when new videos come out so we can interact and I'll answer your questions. Also, please like this video and share it with friends if you think they'll get any value out of it. We really appreciate the likes and the comments and watching the video all the way through. The dang algorithm really likes that as well. So please do that if you saw any value out of this video. And as always, wait till the end. We got a good Maisie's joke of the day waiting for you. So I was going over a few properties with that good-looking gentleman sitting over there right in the chair. You can't see him outside the camera. He is newer in investing in real estate, and he is wanting to get into some rehabs and get into some projects and really ramp up his real estate investing career, get to 100 rentals and do a bunch of flips along the way. He's ready to rock and roll. He's ready to go, but I've had to rear him in a couple times, and that's kind of what this video is going to be about how to minimize risk, especially for new investors. And that is simply doing smaller rehabs, getting in and out quickly, just doing quick cosmetic rehabs. Just think about it. Let's take a step back. Let's take a 30,000 foot view. The market, when it dips, is going to do this, and it's going to slowly dip over time. I promise you this, not going to drop 20% overnight. It never has and never will, even in '08. When the real estate market does dip, does crash, do whatever it's going to do, however much it's going to decline, you can realistically and logically come to the conclusion that it's probably going to drop somewhere in that 5 to 10% range as far as market price goes over a 6 to 12 month period. And that's a pretty drastic shift in the real estate market. So if you look at it that way, over 12 months, it's going to drop 10%, let's just say. How do you avoid getting caught? Well, that's getting in and out of rehab projects quickly and wholesaling and doing other things that don't leave you in a long time frame of exposure. If you're doing a 6-month rehab, man, the market can drop several percent and you can get really hurt. But if you're doing a 30-day rehab, the most it's going to drop is 1% to max, so you're not going to get hurt. Maybe you won't make as much money, but you'll still make money. Or maybe you won't, make a little bit of money, you'll break even. But if it's a good investment and you know your numbers and you're running everything properly and you're in and out quickly, you are just simply not going to get hurt as bad as doing a long 8-month project and the market had dropped 8% during that time. That's a big percentage, and especially if it's a high dollar rehab, that's probably a good chunk of your profit. But if you're in and out quickly, or you decide to focus a little bit more on wholesaling as the market's kind of in some turmoil, wholesaling, there's zero risk if you do it right and you do an assignment or a double close. So there can be zero risk in certain types of investment, but if you're going to be rehabbing either to rent and flip and sell, or rehab and rent and flip with the BRRRR method, the BRRRR strategy, which there's a video right up here that goes in a little more detail about the BRRRR strategy, the BRRRR method, if that's new to you. But if you're rehabbing either to flip or to rent, if you get in and out quickly, there's a couple things that does. The first is it keeps the length of time that you have that higher interest short-term loan out with a hard money or private money lender. It shortens that time frame so you're not paying as much interest. You're either selling it and done paying interest, or you're renting it with a bank at a much lower interest rate, so your exposure is much less. So that's the first part. It helps take care of that short-term money much quicker. The second part we kind of talked about a little bit is it just helps you get in and out of that market. So if the market is dipping, it's not going to dip as quick, or as that market does dip, it doesn't dip quickly, but over time it can dip a lot. You'll be in and out quickly, so you won't be able to ride that wave down, or you won't have to ride that wave down as long. And the other part of the third, and honestly maybe the most important part of that, is you're doing quick cosmetic repairs. So if you're doing a 20 grand rehab and you go over budget 10%, that's $22,000. That's not too bad. You budgeted 20, it's $22,000. But if you have a $100,000 budget and you go over budget 10%, that's $110,000. That's $10,000 that is less profit that you're going to make, assuming you ran your numbers right and assuming that the market didn't dip too much as you were doing that rehab. And it's also just easier to do a $20,000 rehab if you're new. It's probably a new kitchen, which is pretty easy to do, new flooring, new paint, and a new roof. 20 grand gone. As opposed to if you're doing a bigger project, bigger rehab, to where you're taking down walls and adding a room, or doing complete overhauls in an older building or something like that. That is where you can get into a lot more trouble. A little bonus tip for you here is, if you're new into this, I would suggest trying to do a little bit newer construction rehabs. I'm not saying 1990 and newer. I'm talking like 1950s, 1960s, 1970s and newer type projects. It seems like the older you get, in the early 1900s and even late 1800s in some areas on the East Coast, those houses just have more issues with electric, knob and tube wiring that has to be completely redone, stone foundations potentially with, other foundations poured on top of it. There's just a lot more that goes into those older type homes. Yeah, there's potentially a big profit at the end, but in general, if you're newer, the best thing to do is just get in and out as quickly as possible. Just do some cosmetic, quick rehabs. So Dusty, who you've seen a couple of our videos on here, I've had him on our lives, I've done a couple of videos with him. He made a great point when we were talking about this video. He mentioned that he did a big project like this, the one and only time he's ever gonna do it, and it just drained him emotionally, physically, monetarily. It just completely drained him. It took so much time, so many permits, so many drawings and approvals, and it just took so much time that it just completely drained him and took the joy out of doing rehabs. These should be fun. And while it is fun to completely reface an entire building, that's just not where most people are successful in real estate. Yeah, you can think that there's this big carrot at the end of that where you're gonna make a big profit, but it just simply, usually, honestly, doesn't turn out that way, because the market shifts. There's not as many houses in that price range. If you're doing a big rehab and a crazy high price range, there's just not as much data there as there are in these smaller type rehabs, smaller type price point ranges, to where you're in and out quickly. You know what that thing's gonna sell for. If it's, an entry level house price in St. Louis, $250,000, $300,000 house, I know that what I'm gonna sell for, if it's, if the numbers make sense, it's gonna sell for that. If I'm gonna put a house on the market at $899,000 in St. Louis, I just have no idea, is that gonna sell for $899 in the first week, or is that gonna sell 6 months later for $750 as we have to drop it? You just never know what you're gonna get into when you do those projects. And these big projects, to drive this point home even more, when you do a big project, you probably have 20 different trades to deal with. It's just a nightmare dealing with coordinating this, coordinating timing. Oh, the drywall mudder and taper is behind. All right, we got to push the painting back now, which pushes the flooring back. There's just so many different things you have to connect when you get into these big projects. But if you're putting in a new kitchen, new floors, paint, and a roof, that's super easy. That's 4 contractors, maybe 3 that you have to manage and handle. It's just a lot simpler and easier. To put a kind of a bow around this, if you want to mitigate your risk, if you're afraid that the market is going to crash soon, but you still want to invest and you don't want to wait, the crash may be 6 months, it may be 6 years, you don't know when it's coming, you don't want to wait. A, I love that attitude, get it now. But B, you can still invest. So if you want to mitigate that risk, just do short, quick rehabs. For all the reasons I said in this video, you get in and out quickly. And also, honestly, you can wholesale. Wholesale is a great way. We have a ton of videos. In this video above, I talk about wholesaling and how you can do it without any risk, because you never have to close on the property, with the way you write the contract and have a contingency and how you formulate the deal. So that's a great way to have 0 risk. But if you're going to be rehabbing, this video hopefully can help kind of point you in the right direction to where you will have less risk and hopefully be just as profitable. What do you call a cow with no legs? Ground beef. All right, guys, thanks for watching. We really do appreciate it. As always, share with family and friends. I'll see you on the next one. Let's make 2021 a great year.